You're welcome to the Policy Council. My name is Okwemi Agbaje. Today we talk about investments, the Nigerian investment management space. And I talk with a top-rated investment manager with national and international credentials to explore the conditions in the sector and what the short and long-term outlook is. Enjoy the program. You're welcome back to the Policy Council. Today my guest is an investment management expert, and we focus on investments and pensions and all of that space around the investment management market or business in Nigeria. He's the CEO of SIM Capital Alliance Limited. He's an Harvard MBA, another one we're bringing, and he's an ex-Anderson, ex-Goldman Sachs, ex-PNC Bank in the US. He founded and managed ARM Pension Funds Administrator. He was an ex-ARM mainstream manager before that. My guest is Mr. Funsho Doherty. You're welcome to the Policy Council.
Thank you, Okwemi.
So Funsho, you have this, if I may say so, sparkling CV. The best institutions in the world and in Nigeria, ARM, the ARM PFA, Capital Alliance, and then in the US, Goldman Sachs, Harvard Business School. Tell me the story, how you went through all of this, and what was your motivation as you moved from all of these institutions?
Well, thank you, Okwemi. I think that if I take it right back to the beginning, my background was in accounting. I studied accounting at the University of Lagos. And once I had completed the bachelor's degree, you know, the typical thing when you study accounting is to do the professional exams. And for me, Anderson was a natural choice, if you are familiar with Anderson in the market at that point in time. So I joined Anderson. I did my professional exams there. And so this is sort of the finishing school for accountants, as it were. And then the opportunity came up to move into the investment management field. This was when ARM was being established, then as a subsidiary of Guaranty Trust Bank. And I felt it was a novel opportunity. We didn't have much in Nigeria in the industry at that point in time. An opportunity to get in on the ground floor and learn the business, which is what I did. And I did that for a few.
I was your account officer in GTB.
Yes, you were in GTB at the time, charging us too much in fees. Yeah, I did that for a few years. And then the bug to go to business school bit. I mean, it's something I'd always had, but you know, when you start working, you get busy, a year passes, 2 years pass. But anyway, the opportunity came along and I went to the Harvard Business School. I did the MBA. Straight from Harvard, I joined Goldman.
Did Dick Kramer have a role to play in that process?
Well, you know, Dick, interestingly, Dick hired me out of college. Dick interviewed, we were very few, I would say then, in the firm, and he pretty much was the last interview that you did prior to entering. So I have him to thank for my first job. But I think whilst not directly involved in my application process to the business school, I would say indirectly he was involved because you know, a number of people had gone through him and ended up at the business school. So it's something that you know, even if it's only by way of making you believe that you are able to do it, you know, I would say it's a contribution. And now, many years later, I'm back working.
You're back with Dick at Capital Alliance.
Business school, Goldman Sachs immediately thereafter, all the while still in the investment management industry. We relocated a couple of times in the US because my wife and I were both there, professionals, so we had to find a region that worked for both of us. And through that process, I was with both Goldman and PNC until I got the call when the pension reform was being mooted to sort of gauge my interest and whether I'd be interested in being a part of it. You know, and I thought it was a great opportunity. I thought it had a lot of potential. And I thought that it was the right opportunity to make the transition back to Nigeria, which was something that I always felt I would do, but would have to be done in the right sort of circumstances and so on. And so I came back right at the beginning of the implementation of the reform. We were one of the first institutions licensed.
You were CEO of ARM PFA.
Yes, I was CEO of ARM PFA. We were one of the first set that were licensed. And we went through the process, the early process, jungle-like process of essentially building an industry from the ground up. Very challenging, but very rewarding. And I think when we look at the industry today, I mean, I think that the results to a large extent speak for themselves, even though there are challenges, which I'm sure we'll touch upon.
We'll talk about that.
So that's kind of been my story, and ultimately moved on to Capital Alliance, where I am now, running Sim Capital Alliance, which is also an investment management firm.
Okay, let's take a short time out, and we'll talk about Sim Capital Alliance, what it does, what it's trying to do in the marketplace, and reflect perhaps on your experience in the pension sector. We'll be right back.
Who knows Abi better thing? Abi who know like better thing? All these fine things where they see so. Now money government they take do now. Abi, I think it's like, I mean, excuse me, I dey pay my tax. I dey do a thing, I dey pay my tax. Say you don't pay your own tax. If you pay your tax, I pay oh.
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome back. I'm talking to Funsho Doherty, Glittering Investment Manager, current CEO of Sim Capital Alliance Limited. So what is Sim Capital Alliance? We know Capital Alliance is private equity. We know there are Cape Fund and all those other private equity firms. We know real estate funds and all of that. But what's Sim Capital Alliance?
Well, Sim Capital Alliance actually is an investment management arm of ACA, the ACA group, and basically it is a SEC-registered fund management company.
Okay.
You may be aware of the Sim Capital Alliance Value Fund, which is a closed-end fund which is listed on the Nigerian Stock Exchange, which has recently come to the end of its third full year of operations, about 3.5 years now. And has had a pretty good outing over those 3.5 years. So that's essentially what we do. You could think of it as the public market investment arm of what ACA does.
Okay, let me take reflections on your background. I wouldn't let you go without leveraging your pioneering role in pensions. So I was involved, tangentially consultant, everything in the pensions sector development. And today we hear there's over 4 trillion naira in pension investment. The firm you founded is clearly a leader. You evidently didn't do a bad job at all. But looking back on the sector, what would you say has it fulfilled the promise? What do you think are the challenges? What do you think policy should be addressing? There were some recent reforms, a new law and all, but it also seems to have created some problems of its own. Well, what's your reflection on the pension sector in Nigeria?
Well, I would say that for an industry that is less than a decade old, on balance, I would say that given where we're coming from, we have to acknowledge that a lot has been achieved. I think if you think about the backdrop against which the pension reform was passed, you had a situation where many people had no provision at all. And of those that had, they were not sure that they would be able to access their benefits at the right time. And so it was a bold experiment, something that was created from the ground up, which created a number of challenges, but was also a fortunate development because it gave you the opportunity to do it in the way in which you thought was the right way to do it. In other words, so the crafters of the legislation, crafters of the regulation could, take an ab initio approach to developing it from the ground up. So I think we've made a lot of progress. A lot of the focus in the early days was on ensuring that the system got off the ground, that there was sustainability, that the funds were safe, that there was that we didn't have any blow-ups in the early years, which could have damaged confidence in the system.
Of this.
And I think that has largely been accomplished.
Yeah.
If you also think about the period we're talking about, this is the period when you had the financial crisis globally. Yeah. And I think that this is one area where we can give ourselves as a nation a pat on the back, because some of the negative experience that a lot of countries have faced with their pension systems, this system emerged relatively unscathed, which I think is a very positive development. Now, the area we need to focus on going forward, and this has been the principal area of challenge, is how do you transform from this initial phase to a phase where now you have a stable system that can be supportive of the long-term capital needs of the economy. And I think that that's a process that we're starting to go through. It's a process you have to approach carefully. It's a process that will involve both the public and the private sectors, and will need an enabling environment and so on. And there are a number of challenges in that area. But I do think that that's the phase we're in now.
Because one of the arguments for pension reforms was that we would create long-term funding for infrastructure, for real estate, for all of those things, which is that phase that you're now talking about.
Absolutely, and that's the phase that we're in now. There's a bunch of things that have to happen to facilitate that. So you need the right instruments, you need the right markets. The pension operators themselves, and I was one of them.
And their president, indeed. You were president of PENOP.
Initial president. They're not experts in infrastructure. They're not experts in private equity. And so you need the right instruments and vehicles for them to access these markets, which are the less traditional markets. And we're seeing a number of players active in moving in that direction. And our firm has done a fair bit on the private equity side. Okay. But I think we need more of that.
REITs, real estate investment.
Yeah, we need more of that.
Mortgage-backed securities.
I do think we will see more of that. We need the regulatory environments to back them up, and there are a few things that could assist. So I know some engagements are going on with regulators in certain areas around this, but I think the opportunities are great. Okay,
let's take another time out, and we'll continue this enlightening conversation with Funsho Doughty, CEO of SIM Capital Alliance Limited. We'll be right back.
My name is Femi Durojai. Welcome to the New Lagos, where things are improving every day. I work on the island and live on the mainland. But that's no longer a problem. With improved roads, I get to work faster. Sometimes I even leave my car and use the BRT bus, which is comfortable, fast, efficient, and reliable after a hard day's work. The nights and evenings are even more fun. The streets are better lit, and the city is more secure. So I can catch my phone in peace. I pay my taxes because I want to continue enjoying the good things a big modern city like our Lagos brings. So it's my taxes that makes them real. Have you paid your tax?
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome back. We're talking investment management with a very important investment manager, Mr. Funsho Doughty of SIM Capital Alliance. So Funsho, let's look at the whole investment spectrum in Nigeria. It seems an objective observer would say it's a bit challenged at this current time. Capital markets falling dramatically, both equities, bonds, everything. The private equity space is probably limited, shallow so far. We've spoken about the restrictions on infrastructure funding and all of that. What's your opinion? What's your stance? What's your outlook in relation to the investment space in Nigeria?
It's a good question. Clearly, the markets are volatile and have been volatile in the recent past. But that's what markets do. I think that underlying all of it, though, the most recent turmoil that we're seeing actually has a lot to do, apart from kind of the global volatility that we're seeing, in Nigeria's context, has a lot to do with the fundamentals of the economy, which, as you know, are largely built around oil and oil prices. And to a large extent, I think what we're seeing today is, I don't want to use the term nemesis catching up with us, but certainly the effect of not doing what we ought to have done in the past. And really, it was to be expected. Now, so the capital market just been a reflection of that, and a reflection of the companies that operate in this domestic economy will reflect the fortunes of those, which in many cases are tied to oil. Now, having said that, if you talk to different players, you get different views about what's likely to happen to oil and so on. And if you ask 3 people, you might get 6 views. I think that ultimately where we have to go as an economy is really down this path of diversifying the base away from oil. And I see some positive trends in this regard, actually. So some of the import substitution measures around replacement of imports, whether it be agriculture, refined products, etc. Those are all positive. Automobile,
whatever.
I mean, we can quarrel about what's the timing of it and so on, but there are trends in the right direction.
Yeah.
I think that will help. I do think that the volatility will settle, and when the volatility settles, the underlying potential for many of these instruments will come to the fore. In the long term, I'm positive about the Nigerian economy. I'm positive about the underlying Nigerian consumer story, which is a key driver for many of the businesses that operate in this environment. And so if you have that as a sort of premise, then you have to believe that the underlying businesses will do well. Now, the timing of when recovery may be debatable, and you may go through patches of volatility.
Seeming recovery.
But that's why, speaking as an investment manager, it's important to have someone who's helping you think about these issues, who is used to operating in markets like this.
What do you think is the role of political risk or perceptions of political risk around imminent elections in all of this?
Well, clearly it factors into people's analysis, right? And I would argue maybe more so the foreign investors than the local investors, but foreign investors are, a significant player in our market today. We don't have it used to be the case that when you looked at the local markets and you looked at the international markets, you had almost a negative correlation. In other words, when the local markets were up, the foreign markets were down. But today is totally different because of the entry of the foreign investors. So for them, it is more of a concern, and I think it's a concern for all of us. We are hopeful, that some of the political challenges that we're going through, we will emerge from intact and perhaps stronger for those challenges.
Okay.
One of the things that I think we sometimes forget is that the time frame over which political advancement should be measured is often in a different sort of time frame than we tend to think about it.
Probably decades or
generations. So sometimes we are sort of stuck in the wrong frame of assessment, if you see what I mean. But if you look at the underlying trend, we will have challenges, we will have hiccups, but I'm an optimist that if you are working with the right sort of system over time, it improves.
It reforms.
It reforms, and
gets better.
Obviously there's a lot that we individually need to do, right, to be engaged and part of that process and to facilitate change where we can. But again, I'm an optimist, and maybe that's why I'm in the type of business
investment management business. Okay, let's take a final time out, and on that optimistic note, and we'll come back. We'll ask our guest what he sees for his firm, how they plan to evolve within the investment management space. We'll be right back.
My name is Laide Awoyemi. I live for Lagos. You see, as our new Lagos just defined the go. Good thing, good though. To go market now, no hard at all. Just pay. Sit down inside BRT bus. Small time, you don't reach where they go. Hospital nko, the full ground. And for me and my pikin where I just born, treatment na free. You look left, you look right. Them they build new roads, new hospitals, new schools, new things everywhere. Everywhere they shine, gone. We thank God, though. But come on, I hear saying that this tax money wey they pay, and then they use do all these good things. Me, I they pay my own tax too. Say they pay on your own.
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome to my final segment with Funsho Doherty, CEO of Sim Capital Alliance. And Funsho, there's a question I was going to ask you which I skipped. And that's that I note from many things I've read that many of the stocks on our capital market are trading below their book values. So the problem is not their fundamentals for many of them. There may be one or two that have issues with fundamentals. But so, which means that essentially, if I was a brave investor who was taking a long-term perspective, there will be a buying opportunity in the market. Do you think so?
Well, I think in one word, yes. But I think you have to be selective. In other words, you have to be able to discern which companies are trading at a discount in spite of their fundamentals, and which companies are trading at a discount for very good reasons. Because of their fundamentals. You know, the discount on book value question is a technical one, and there are different reasons why it might. But in general, to answer your question, I think that there is great value in many pockets in this market. And as value investors, those are the kinds of things that we look for. Indeed, you can almost say that we look for market environments like this because, you know, if you buy well, you will do well. But if you don't buy well, then you will not do well. And these are the kinds of market environments in which you can find opportunities to buy well if you know what you're doing.
Okay, let's close with a discussion on Sim Capital Alliance. How do you expect, I mean, where do you expect your company to be 5 years down the line, 10 years down the line? How are you going to evolve? What's your stance in relation to the market? And how do you see the market long term?
Thank you. Well, I think that our view is based on our premise about the Nigerian economy. We think that the potential for the economy in the long term is strong. We believe in the underlying Nigerian consumer story. And therefore, we believe that the asset management industry, which is the industry in which we are, essentially will mirror that Nigerian consumer story. And we want to be a part of that. Our first salvo, I guess in that regard, is the Value Fund, which we've launched, which is a fund that individuals do not many individuals participate in directly. We have a few, but through the institutions that are invested in that fund, a vast number of people participate. Going forward, our strategy is to look for ways to do two things. One is to facilitate some of that intermediation that we talked about a while ago, in terms of creating the vehicles that allow the institutions that have the capacity to invest but do not have the outlets to invest,
the vehicles,
the credible vehicles to invest through. That's one. And then the second is to essentially be in a position to serve consumer markets through institutional channels as part of the long-term Nigerian consumer story. So these are the two broad areas that we see, and obviously within that there will be a number of specific product opportunities and products and so on that will roll out. So.
Okay, so your view, long-term, the takeaway is you're positive about Nigeria.
Yeah, I am.
Absolutely. Sure. Thank you very much, Funsho.
You're welcome.
We'll be right back. I agree with my guests that the long-term outlook for the Nigerian economy is clearly positive. Our challenge is navigating the short-term risks around oil sector dependence, around political risk, and around building a diversified, more equitable, shared prosperity around the economy of Nigeria, and building an inclusive growth economy, rather than one in which the benefits of growth are restricted to a few. Clearly, in this context, the investment management space can be better and will be better as we develop. But with the positive disposition that my guest sees for the Nigerian economy going forward, the future is not as bleak as many would have thought. Thank you very much for watching. See you next time.